Secondee Salary, tax section of CFO 100. In this lecture, you can learn how to design salaries for secondees. It is a specific topic when you control overseas entities because those companies tend to have management personnel from their parent companies. Based on the secondment agreement, the person is dispatched and works from headquarters to those companies. The design of salary payment is a primary point many people discuss and ask questions from the business team to account and tax departments. Normally, the salary is paid by the company which the person is working for. Still, headquarters companies sometimes pay some portion. So the guideline and frequent answers for the question should be designed to mitigate the time consumed for the issue. If your company doesn't have clear guideline, the such material can reduce the total work to check the theory of the topic. Such typical discussion points are described below. The first thing is how should the seconded person's scope of work be determined? Second, how should we calculate salary? And who should bear the cost? The third one is the currency proportion and a payment route recommended for salary payment. And the last one is how should personal tax filing be taken care of overseas? In that guideline, you should cover the answers for those typical questions. Especially the number 2 and the number 3 are important points to avoid any tax and financial risks. So you should focus on those 2 points as priority. It is a matter related to the human resource department as well. If you feel your company doesn't have a clear view or rules about that discussion point, the CFO should warn the Human Resource Division and involve them in the discussion. In the next slide, you can see much more details about number 2 and number 3. This slide shows the question and answers to the most frequent point regarding the secondary salary. This point relates to tax risk, so when the CFO creates the salary guideline, you should ask the tax team to check secondment agreements to assess to mitigate the potential tax risk for tax inspection. Some companies have no such guidelines and the issue is left alone. The business division designs the salary based only on the requirement and the business arrangement. It causes a potential tax risk on the headquarters side. Firstly, you need to understand that the concept comes from the seconded persons working for the recipient company under its control. Their scope of work is also defined as working for the recipient company. This starting point is the answer to question number 1 on the previous page. When you consider who is the beneficiary of their work, it is the recipient company. This is a fundamental concept for question number 2 also. If the seconding company takes the cost, it is considered a donation to the recipient company as non-tax deductible expense because the company has no benefit from the work by the sent person. So it should not bear the cost. On the other hand, there is an exemption for this rule. Suppose the local salary level in the recipient company is lower than the original salary. In that case, the difference can be permitted portion to be paid by the seconding company, and it is possible to regard it as a deductible tax expense. Reflecting this fact, the answer for the second question number 2 consists of several points below. Before going into tax perspective, the salary amount should be above the minimum required level to get a visa in the country. There is always a minimum requirement for the salary level to issue the working visa. Especially in Singapore, the government requires overseas workers to have a very high salary level, so such a regulation defines the minimum salary payment. You frequently have the case in developing countries that the recipient company cannot afford to pay the high salary of the seconded person, and the business division tries to design that the headquarters takes the cost. However, the seconding company can only pay the difference between the original salary and the salary based on the salary table of the recipient company. The exceptional case is only dispatching trainees. The treatment is different. When you consider the proportion of the salary payment paid by the headquarters side, you need to check the salary table in that recipient company. For the preparation for tax inspection, the solid table needs to be prepared as evidence. The tax inspector quickly finds this typical issue during a tax inspection for headquarters. Every person related to this issue should understand the basic concept. The third question was, what currency and payment route is recommended for salary payments? Related to those topics, the Tax and Finance Division will communicate with the HR Division to design an effective and simple payment route. The answer to the question is less weak currency and less overseas remittance. The reason is that a large salary portion of weak currency is not preferable for the seconded persons. You can imagine that you live in developing countries like Vietnam. That currency is getting weak and weak every year compared with other hard currency. If you receive a large portion of that local currency and keep it, the money worsens for a long time during your assignment period. In addition to that, overseas remittance usually causes many cost and regulation issues and needs forex treatment, so it is better to make it less. Making the payment process smooth is better for daily operations as well. In any case, you should avoid remittance issues as much as possible. You can see the table on the right side according to that concept. In this case, there are two entities, seconding entity and the recipient entity. The best case is that the local portion is paid on the local side. It is simple and feasible for operation. Based on the local salary table, the recipient company only bears 50K and the seconding company takes 300K. If the proportion is also fine for the seconded person's view of his life, each portion will be paid only in each country to avoid any unnecessary international remittance. 300K is going into the pocket in the bank account of the individual in that headquarters country, and 50K is going to the bank account in the recipient country. This is the most preferable and simple example. Still, if some portion needs to be paid from seconding country to the recipient country, overseas remittance should be done between the company and the company. Then the recipient company pays the money to the seconded person as local currency. This route is the best to avoid the complicated process of international remittance. When it comes to personal tax filing, this is the fourth topic. All salary should be recorded as salary for the personal tax. It doesn't depend on who and where bear the cost. You can outsource the personal tax filing in the recipient country because dealing with it in-house takes too long and too much time. Secondee salary is a common issue for global companies, but not all companies properly handle it. With reflecting the concept in this lecture, it is recommended to look at the existing arrangement once again and create a feasible process with HR and other related divisions. In another lecture, you can learn the other technical way to handle the secondary salary using a service agreement. It can expand your options to design the guideline.